All right, welcome to today's Explainer. I am absolutely thrilled to have you here because today we are breaking down some seriously practical insights from the YouTube channel, Mr. How. We're going to demystify the entire Binance platform, stripping away all that complex crypto jargon and looking at an incredibly straightforward framework. This blueprint categorizes the different ways you can earn on Binance based entirely on just two things: the size of your wallet and your appetite for risk. So whether your pockets are literally completely empty right now or you're ready to dive headfirst into the deep end of trading, there is a specific tailored path for you. Okay, let's dive into this and see exactly how these four personas break down. Here's our quick roadmap for the breakdown. First, the setup and verification. Then, level 1 with zero capital. Level 2, the safe saver. Level 3, spot trading. Level 4, futures. And finally, we'll cover exactly why you must learn before you earn.
So, Section 1, the prerequisite, account setup and verification.
Getting set up really isn't as daunting as it sounds. Creating an account and completing the KYC, the Know Your Customer verification, scratch that. It takes literally 3 to 4 minutes. It's that fast. You start by just entering your email and a verification code, then you move on to uploading the front and back of your ID card, followed by a super quick face verification right through your device's camera. And hey, as a nice little bonus, once you complete these steps as a brand new user, you can head over to the Rewards Hub and claim a completely free $2 reward. I mean, it's a small incentive for sure, but it's a really great way to kickstart your newly verified account. Moving on to Section 2, Level 1, the Zero Capital Earner, earning without depositing. So think of traditional social media on one side. You post your thoughts, share quotes, and in return, well, you get likes and comments, right? On the other side, we have Binance Square. It functions almost exactly the same way. You can post text, share pictures, or just repost trading quotes. But here is the absolute game changer. Binance Square features a right-to-earn section. Instead of just getting likes, Binance actually pays you in fractions of cryptocurrencies, like USDC, for your engagement and your posting. You can complete daily goals right in their task center, things like posting with specific hashtags, using images you find on Google, or simply sharing different trading quotes. Now, it's super important to set realistic expectations here. Day-to-day posting on Binance Square isn't going to make you a millionaire. You are not going to get instantly rich doing this. But by doing, say, 10 to 15 posts a day, you can steadily earn a small amount, roughly around $2 daily. It's a legitimate, absolutely zero-risk starting point for someone who really just wants to get a feel for the ecosystem without putting a single cent of their own money on the line. Next up, Section 3, Level 2. The Safe Saver, capital with zero risk. To pull this specific strategy off, you use what are called stablecoins, specifically USDT and USDC. Now, what are those? They are cryptocurrencies designed to remain permanently pegged to the US dollar. So 1 USDC equals 1 US dollar, always. By holding stablecoins, the Safe Saver completely bypasses the famous wild volatility of crypto. Your underlying balance simply isn't going to crash overnight, which, let's be honest, provides incredible peace of mind for this specific type of persona.
So what do you actually do with those stablecoins? Well, you put them in the Earn section of the app. For example, the source points out that depositing USDC into a flexible Earn account recently yielded a yearly rate of 12.17%. The absolutely crucial point here is that you are generating passive rewards on money that isn't fluctuating in its base value. And because it's a flexible product, you can just withdraw your initial deposit and all your accrued profits literally at any time. It's an incredibly powerful option for the risk-averse user.
All right, Section 4, Level 3, the calculated spot trader. Stepping into the market.
Okay, so spot trading is basically buying an asset, waiting for the price to go up, and selling it for a profit. Simple, right? But the strategy changes drastically depending on your timeline. First, you have day trading. You are intensely tracking 15-minute price candles, buying and selling within hours to capture really small movements. Say, buying Ethereum and selling it shortly after for a quick $10 to $40 profit. Second, midterm trading. Here, you zoom out a bit. You might buy Ethereum at $3,800 and just calmly hold it for 1 to 3 months until it reaches $4,500 or $5,000. You endure the temporary dips because you're waiting for that larger target. Finally, long-term trading. You buy an asset with the expectation of massive gains over 1 to 2 years. For long-term holds, you often just buy it and basically forget about it, potentially even moving it off the exchange entirely and into a private wallet for safekeeping. Your holding period completely dictates your strategy here.
Now, for Section 5, Level 4, the High-Risk Futures Trader, entering the danger zone.
Entering this level comes with a very strong personal and ethical warning from the creator of this blueprint. He explicitly states that he considers futures trading to be haram, which means forbidden in Islamic law. It's a really interesting perspective to unpack. The reasoning he gives doesn't actually cite interest rates, but rather the underlying mechanics of the trade itself. In futures, you can place financial bets on whether a price will go up, which is called a long, or go down, which is a short. For the creator, this directional betting crosses a firm ethical boundary, regardless of how much technical proficiency you have with the tools.
Ethical considerations aside, let's look at the mechanical risk, which centers entirely on this concept of leverage. Take the example of 15x leverage. Here's what that means in actual practice. By applying a 15 times multiplier, a user with only $266 in their wallet can open and control a massive $4,000 trade position. You are essentially borrowing capital to amplify your buying power. If the market moves in the direction you bet on, your profits are supercharged based on that $4,000 figure, not your initial $266.
But leverage is a massive double-edged sword, and this is exactly why it's level 4. Because your position is amplified, if the market moves against your bets even slightly, your initial $266 margin gets eaten up incredibly fast. This introduces the very real threat of account washing. This is when your entire account balance is completely wiped out, potentially in just 5 minutes of market volatility. Because of this extreme risk, the source urges that if you absolutely must dabble in futures, you should only ever keep a tiny amount, like maybe $100 or $200 in that specific trading wallet, and never ever your entire portfolio.
And finally, Section 6, Resolution. Learn before you earn.
The underlying message of this entire breakdown is crystal clear. Learn before you earn. And honestly, more importantly, don't pay to learn. Avoid those overpriced paid courses that frequently just copy free information and sell it to beginners who just don't know any better. Instead, use the free resources out there. For instance, try searching YouTube for Binance Trading Full Course to find a specific 2-hour and 19-minute masterclass that covers everything from A to Z. Or, for complete beginners wanting to understand the history of Bitcoin and foundational concepts, searching for Crypto Trading Full Course is a totally great start. The knowledge is out there and it is 100% free. You just have to put in the time to actually watch and understand it.
So we've unpacked the mandatory setup, the zero capital social posting, the secure yield of stablecoins, the strategic patience of spot trading, and the high wire act of leveraged futures. It really is a brilliant modular system that proves there isn't just one single way to engage with these platforms. It's like a giant puzzle where you choose the pieces that fit your life. So I'm going to leave you with this to really reflect on. Based on your current wallet size and your true risk appetite, which of these 4 paths is actually right for you today? Keep exploring, keep learning, and I will see you in the next explainer.